Gold prices ended higher Monday as President Donald Trump's claim on Twitter that Russia and China are playing a currency devaluation game contributed to pressure on the dollar, lifting demand for the precious metal, which is traded in the greenback. Palladium futures, meanwhile, marked the highest finish since late February, buoyed by worries about the potential for further U.S. sanctions on Russia, which is among the world's biggest producers of the metal. Trump's remarks on China and Russia playing the devaluation game and it not being acceptable contributed to gold's gains Monday, said Michael Kossez, founder of Gold Broker USA (GOLD). The comments resurrect concerns from late January when Treasury Secretary Steven Mnuchin seemed to reverse the traditional strong dollar policy at the Davos conference. Russia and China are playing the currency devaluation game as the U.S. keeps raising interest rates. Not acceptable. Donald J. Trump at Real Donald Trump, April 16, 2018. The president seems to be inferring that devaluation will beget devaluation, said Kossez. That's why the dollar took a tumble and gold pushed higher. June gold GCM 8 minus 0.38% tacked on $2.80, or 0.2%, to settle at $1,350.70 an ounce. It tallied a rise of roughly 0.8% last week, after ending Wednesday at the highest finish since late January. May silver SIK 8 minus 0.22% climbed 0.1% to $16.677 an ounce. The ICE US dollar index DXY 0.07%, which measures the greenback against 6 major rivals, fell 0.4% to 89.44. A rise in U.S. stocks Monday, which enjoyed a relief rally pinned on hopes the U.S. may not be dragged into a deeper conflict with Syrian allies. Russia and Iran had put pressure on gold in early dealings. Gold's moves also follow a round of mixed economic data, though those reports were seen doing little on their own to dissuade the Federal Reserve from modest, gold-negative interest rate hikes over coming months. Markets have also tempered the reaction to news the U.S. joined with allies France and Britain to launch missiles over the weekend that destroyed much of Syria's chemical weapons capabilities. The strikes left much of President Bashar al-Assad's conventional military facilities intact, easing immediate fears of an escalation in tensions with Russia, a backer of Syria's regime. On Sunday, Assad's forces unleashed fresh airstrikes against rebels in a demonstration of his regime's continued strength. Still, Russian stocks and related exchange-traded funds were under some pressure after reports the Trump administration will target the country with more sanctions, this time based on companies linked to the Assad regime and chemical weapons. Gold is reacting hardly at all to the US-led military strike against Syria, which, according to UK Foreign Secretary Boris Johnson, was a one-off action, with no further attacks planned, said Carsten Fritsch, commodities analyst at Commerzbank. Read, Russian sanctions could fuel another aluminum rally. Haven demand for gold may be showing up in exchange-traded fund flows, however, Fritsch said. Gold ETFs registered inflows of 16.6 tons last week and of no less than 36 tons since the beginning of the month, the Commerzbank team noted. This is already nearly twice as much as in all of March. By contrast, speculative financial investors left the net long positions more or less unchanged in latest week. Investors are slowly beginning to show increased buying interest in response to the geopolitical risks and resulting uncertainty. Fritsch said. The SPDR Gold shares GLD 0.14% and the iShares Silver Trust SLV 0.26% each rose 0.3%, while the VanEck Vectors Gold minus GDX minus 0.39% fell 0.8%. Read, global economic growth was a blessing and curse for 2017. Silver demand in other metals trading, palladium jumped in reaction to the Syrian airstrikes, but there is also a large worry that Norilsk Nickel, the world's top producer of the metal, could be hugely affected by the latest round of sanctions slapped on Russia, said Adam Kuz, president of Libertas Wealth Management. June palladium PAM 8 minus 1.66% rose 2.3% to finish at $1,003.75 an ounce, the highest settlement since Feb. 28 copper HGK8 minus 0.90% rose 0.8% to $3.096 a pound, but July platinum 8 Polish zlotys minus 0.33% shed 0.1% to $931.80 an ounce.